Happy 2026, everyone. It's Jen McNamara
And Mariah Kaufman.
with Mariah and Jen Real Estate at Berkshire Hathaway Home Services, Michigan. Mouthful.
Yeah. And we're finally here, 2026. Felt like a really long year. I know it was somewhat of a challenging and interesting year in real estate in Grand Rapids, but we're excited to take on 2026 and I think there's some good things ahead.
I definitely think there's some good things ahead. So we're going to get into it.
All right, I'm going to share my screen and we are going to chat through the presentation that you guys are used to every year. All right, so celebrating our year, just wanted to say really thank you to all of our clients and our past clients and our Sphere, all the referral partners that we had. We had the best year we've actually ever had. So over 10 million in sales with that 25 plus five-star reviews. We could not have more gratitude for all of you. And a fun thing that we did this year is we added on our garden party this summer.
We did, which was very fun. So it was an event that we had for our clients and partners. And I think anybody that was able to attend had a nice time. We got a beautiful day. It was awesome. So.
Yep. And we're in a room where the lights go.
Nah.
January reminders. So just so you know, we are sending out our calendars, the magnet calendars like we normally do every year. If it's not in the mail yet, it is in the mail as of today. So look out for those and let us know if you want one and you don't normally receive one. And then also we're working on our annual property evaluation. So these usually take Jen and I about 4 to 6 weeks because we actually send you a real property evaluation that we spend a good amount of time on every single year for any property that you've bought with us that you're still holding on to.
Yep. So we'll go in, give you comps for your particular neighborhood. If you want a deeper dive, please reach out to us. But otherwise, we will be sending that your way.
Yeah, always good to know the equity that you have in your home.
Absolutely.
All right, we're going to start. I know I can go into the weeds a little bit on the econ data. Jen was like, can we, narrow down these slides? So I get it. We made it a little bit shorter this year, kept it just really important points, right? So I'm going to start again like we normally do, just with the national economy and housing market as a whole. And then we're going to move down into like the more specifics for West Michigan and what that means for you. So I always love Lawrence Oon is our chief economist at NAR. He puts on a great presentation every year. Our big NAR conferences in the fall every year, and these are the slides from those. I've been saying if you have been clients of ours and we've had conversations, you know that Jen and I both feel really passionate about investing in real estate and honestly, the Midwest, right? So be smart about what you buy. Some markets within the Midwest are stronger than others, but as a whole, the Midwest is continuing to see really large property valuation growth. So this is a really great map, just gives you some of that heat. And then also these are the 1 year home price gains, percent change from Q3 of last year to Q3 of this year. But look at all those green arrows through Wisconsin, Michigan, Ohio, Illinois, Minnesota, right? Like the Midwest is this really special little nugget of the country that is a powerhouse that I feel like has just been, not had the attention that it probably deserved for the last several decades. And now people are noticing. We've been helping many clients every year move into our market, and there's a lot of really great things about that. And one of those things is the equity in your home is growing.
And the one thing I did want to say about that previous slide is you do notice the areas where the valuations are going down. Those are often the big headlines that you see in a lot of the media.
True.
So just be aware, those Sunbelt states, like, yes, there is some truth to that, but we have and continue to be isolated in our great little bubble, if you will.
Yes. Ignore the headlines, talk to your local realtor. They will guide you the right way. One of the other things I'll say that's shifting some of this is our weather disasters, right?
Absolutely.
So that's where we're starting to see, and the Midwest is really low on the list in regards to the regions of the natural disasters that can happen here. It's one of the reasons for the move. All right, record high real estate asset valuation and record high mortgage debt in red. I wanted to talk a little bit because I'm still hearing from people that we are expecting that the 2008 type mortgage and housing and recession, right, to happen again. Nothing is indicating that that is actually going to happen anytime soon. This graph is showing you that people are continuing to buy. That's mortgage debt. That's not foreclosure, right? My husband and I just bought 2 units, 2 condos downtown. We took out a mortgage, right? But we are not in foreclosure, right? So I just wanted to indicate what that actually means.
Mhm.
And then record high asset valuation in blue. Look at this just trail,
The
the
growth
growth
there is
of
definite.
real estate valuation in this country. This is something that we both talk pretty passionately about and believe in real estate as a way for you to invest and diversify some of those assets as well. All right. Rate cuts, rate cuts. We get this question all the time. We're going to make this really, really clear right now. If you are sitting around waiting for rates to enter into the threes or the twos again, you could be
It will not happen,
waiting.
most
We'll
likely.
be retired.
No,
We're
I don't know if it'll
retired.
ever happen,
We'll
actually.
see.
We're
Yeah.
not sure if it'll ever happen, but
That was a blip in the history of the United States. So our rates right now are in the sixes really. And that's still over time a really low interest rate. It just feels high because of what happened several years ago, right? But most investors I know are borrowing money until that reaches 8 for the most part. So I do think that we'll see one more cut with the Fed in the
mhm.
coming year. It will depend in regards to how many layoffs we possibly see in Q1 here. Keep in mind, Fed rates and mortgage rates are somewhat correlated, but they are not exact, right? Mortgage rates are also based off of the national debt, which has not been coming down. And then also we have to think about inflation, which we're starting to see a little bit of cool off in some areas, but not in others. So expect interest rates to stay around the sixes. Now, this is important because we do have some clients over the last 2 years that purchased in the high sixes and low sevens. If that's you, it might make sense to reach out to your lender if you think you also have 20% equity or more in your home.
Yeah,
It might make
refi.
sense for a refi, maybe not.
Yeah. We'll
All
get rid
right.
of that PMI if we
Yeah.
think that that could be officially done. So
Yes.
definitely worth a call.
And then just the nationwide forecast as a whole, just where we see home sales, and then also prices over the next year. They're forecasting that we'll continue to see 14% increase. Again, this is nationwide in existing homes, 5% in new home sales. The median home price will continue to grow just a tad. They think the mortgage rate is going to come down into the lower sixes. But again, like I said, and depending on your special rate, you could be somewhere in the high fives, but we're just in that
Sure.
area for a while, right? Job gains and unemployment rate, I'll talk a little bit more about as we move on, but everything that I'm hearing is that investors in the markets are really waiting to see what happens in Q1 to see if we continue to see the layoffs like we've seen some red flags for. But aside from the job market and the unemployment rate, everything else in the economy is moving in a really good direction. Now, one of the big kind of question marks for this year is also AI. A lot of really prominent AI companies are getting ready to go to the stock exchange. And depending on how that goes, that could also make some shifts in the market as well. All right, forecast for 2026. Recession or no, it's still a question mark. I haven't heard an economist yet that's kind of planting their sword in the sand and saying that they believe that it's going one way or another. What we do continue to hear is that a recession is coming in regards to where it possibly happens and when continues to be somewhat of a question mark. Stock market has continued to grow. We had record high growth this year as well as 2024, both really great years for the stock market. There's some concern that maybe some of those are a little bit overvalued and we might see some of that correction happening. Definitely across the board, everyone is seeing that job gains are weakening and the unemployment rate is continuing to go up. And in general, consumers are not happy about the future and are still really feeling the inflation. That's where the Fed comes in, and those mortgage rates coming down a little bit are going to help hopefully save the day.
Sure.
All right, Grand Rapids Metro Data. If you don't follow the right place, this is someone that I would highly recommend that you follow. They are a fantastic economic development company, nonprofit that is really built West Michigan over the last probably about 25 years. They do an economic outlook every single year in the really late winter that just looks forward to the economy looks at the economy forward as a whole and kind of where we've been. They celebrated 40 years this year. All right, Grand Rapids as a whole, West Michigan here, population growth. I mean, it is growing and growing and growing, right? We all
That's
are
pretty incredible.
feeling this.
Yeah, no,
I will say my one concern about a lot of this is because it's really in like these stats show, the population that's growing is diverse and they are young. That is good for our economy. I
mhm.
remember when I graduated college in 2006 and I had to leave Grand Rapids because my industry wasn't here. And that was true for, I'll say, 90% of my friends. Now we're able, with everything that's happened with education, with Grand Valley, Michigan State moving into downtown, Ferris, right? Western Michigan, we're able to really retain our students at significantly higher rates than we ever have before. My one concern with the population growth, right, is that we are not building the roads before they come. And
Hmm.
growing up in Seattle in the 1990s, this is what you saw. So I am very concerned about where we're going to put all of these people and traffic and things like that. So now that we're becoming a larger market, we have a soccer stadium, we have an amphitheater
Lots of great things
downtown.
coming to town.
It's
Yeah,
incredible, but there are things with it that we need to be prepared for. Our regional businesses, they believe that they're going to see increased sales here in 2000 or from 2025 to 2020, 2006, 26, sorry. But however, with increased sales, they are not anticipating expansions or hiring. So we are starting to feel the
that
businesses
is a
start
little
to pull
telling.
back
Yeah,
a little bit here. All right, total jobs are pretty steady year over year here in Grand Rapids. But the one thing I do want to say actually about the jobs is that there are certain industries where the job growth is exploding here in Grand Rapids. And one of those is tech. We really didn't used to be known as a tech hub, and now we really are. So the actual tech job growth in these numbers is really quite incredible. So it's another just example of how our economy here in West Michigan has really diversified. All right, I did just want to know, we always kind of go over like the 20, the year rankings, the list that Grand Rapids was on. And over the years, we continue to hear Grand Rapids top 10 housing market, top 10 place to raise a family, affordability, blah, blah, blah. This year, our rankings, we got on several of those too. But when you really look at the rankings, a lot of these rankings are specifically regarding our economy and our job market here. LinkedIn's number one city on the rise to grow your career. That feels crazy to me, having gone
that
through
is
what I
huge.
did and having to leave the city, right, 25 years ago. Number two, small manufacturing hub. Number one, most entrepreneurial city in the Midwest. Wow. Like it is cool to be a part of something that is
Absolutely.
growing
Yeah,
so much.
agreed.
Lots to look forward to living here in West Michigan.
Absolutely. We're going to do a bit of a deep dive right now into our county, Kent County itself. So our median estimated home values are at 333,000. Just in the last month, there was a little bit of seasonality, which we always see this time of year, late fall into early winter, where things get a little slower. But the year after year, year over year rather, 12-month change in Kent County, 2.6%, which is great considering, we were at double digit numbers for a very long time that could never sustain itself. We are still seeing that appreciation, which is really important.
Yeah, and the appreciation specifically in Grand Rapids is a little bit higher than Kansas.
Exactly. So Grand Rapids, we're at a median value of 353,000, and the 12-month was at 4.5%. So if you do have interest in your specific township or so forth, please reach out to us. We're happy to get you even more detailed data for that. But we're still seeing that growth, which is so important.
Yeah.
And that's what kind of keeps us in that little bit of a beautiful bubble, that Midwest bubble that we're lucky to be in.
Yeah, and just like Jen said, the rates that our property values were growing were unsustainable over the last few years. And I think if you go back and watch our videos from the last 2 years, what we said was going to happen is exactly what happened. Your property value is still growing, just at a lower, more sustainable pace. This is a good thing.
Mm-hmm. Months on inventory. So this is telling and gives us a little bit of an idea. Again, we're looking at seasonality here, but currently we are at 1.16 months of inventory. And it isn't interesting. We're down from January of last year. So very much we're kind of in that place of buyers are still looking. We're seeing, we've got a handful of buyer
Yep.
consultations, these past few weeks of people interested in moving into the area. And there's not that much inventory. Now, they are predicting in 2026 that inventory will in fact go up, but right now it's down from last year.
Yeah, and you can see some seasonality in these bumps, right? Like this is the fall. We see this every single year, and then comes spring market and more buyers flood the market.
Mhm.
And usually we see more properties get listed, but it usually becomes more competitive. Now, I do just want to share. So we have 1.16 months of inventory on hand. A normal balanced market has four.
I was going to say, yeah, we're still
So
very much
far.
a seller's market currently. Very much a seller's market. Did we have that one last slide?
We do.
We just lost it.
There we go.
Okay, here we go.
All right.
Oh, we have a couple slides. Oh, this is the fun
Sorry,
stuff.
like the Forever Realtor are talking
And oh
it's
my
connected.
goodness, there we go. Fun stuff, talking about decorating trends and so forth. I love this because it's very much you feel it's warmth. They're bringing that back. We're kind of shying away from a lot of these sterile environments, and it's now we're seeing more of these homes that have like the earth tones, the natural textile elements to the decorating that is becoming a bit more popular. So these are just some fun things that we're kind of noticing. I loved the mixed materials and the lighting too. I think that's so fun. And you know what? You decorate your home the way that it makes you happy, honestly. If you are thinking about selling in the next year or two, please reach out to us and we're happy to kind of guide you if you're thinking not all renovations or things that need to be done are created equally. So we will help you, especially if you know you're going to be moving. But if you're just going to stay in your house for the next 10 years, just make it the way you love and what makes you happy is kind of our guide.
I'm really going to offend some people right now, but does gray actually make anyone?
I don't. Well, it is interesting how long gray had a long run.
It did.
Gray had a really long run. We are stepping away from gray.
Good.
So back into the warmth colors, if you will. If you are interested in possibly new construction, please reach out to us. There's some amazing communities that are being built up in all different price ranges, and we have helped clients find lots, acreage somewhere, and find a specific custom builder to build on that particular piece of land. And we've also helped clients move into neighborhoods that fit that season of life for them. And it's a lot of fun, but the building process is a unique one, and there is so much to it, and every builder is different, and we have worked with many of them. So please reach out, and we can absolutely help guide you to find the best fit for your stage of life and what you're looking for.
Absolutely. All right, and we will just wrap it up from there. Jen and I, we love this meme, but it's so telling of what we are experiencing in the market in the last 3 to 4 months, really. And we say this with just like a lightheartedness, right?
Absolutely.
But
Very
our
much.
buyers seem to think that it's 2008 and our sellers seem to think it's 2021. Here's the thing, at the end of the day, it always comes down to price, condition, and marketing.
Yeah.
But one of the things Jen and I were just talking about is how important condition is. If you are not at the peak of the condition, you could sit longer in this market. It does matter. Clean up your house. Have us over to talk about what we need to do to make it
To
look,
prep and so forth.
shine,
Yeah.
right? People do care about those pieces.
They're starting.
Yeah.
We have been in a market in the past few years where buyers just wanted anything and they were grateful for anything. That is not the case anymore. Buyers are definitely becoming a little more picky. It's normalizing, which
They
is
have more
actually
to
a good
choose.
thing. And they
Yeah.
do have a bit more to choose from. And so it is really, really important to get your home, if you are in fact looking to sell, to get your home in the best condition that you're able to get it in. And
Yeah.
that's something that we help sellers with all the time. So please reach out. But yeah, this one makes us laugh a little bit.
Alrighty, well, that's it from us. We love doing these every year and we love seeing your faces. Look out in your emails for your property evaluations.
Yep.
If we haven't helped you buy before, contact us and we'll help you buy. And wishing you all a great 2026.
Yeah, make it awesome.